All right. Pre-market this morning, futures are trading modestly higher, still holding above the low that was made yesterday. It did briefly cross above that signal resistance that I mentioned in the end of the day update at 43.72, but it wasn't a sustained break. Therefore, don't have the clearest evidence yet that a local bottom is in place for our wave one, the blue wave one of C here. Therefore, still possible price does get another low, and as noted, 43.16 is the next fib support that price could target for an extension of the wave one. Then from there, we attempt the wave two bounce. If a bottom is already in place for our wave one, though, at the low that was made yesterday, then this 618 retracement of this small bounce off of yesterday's low, 43.5150, is micro support, ideal to hold above as wave B of 2, and any break back above that pre-market high that was made at 43.7950 should confirm that wave 1 completed, and the resistance 382 to 618 retrace of our wave 1 as the target for wave C of 2 would be between 43.8675 and 44.19. Kind of leaning a little bit more towards that potential rather than another low needed in wave 1, but it's not a strong edge between the two. Basically, our parameters near term as far as probabilities go are above this 618 fib here, 43.5150, can kind of lean a little bit more towards the wave 2 in progress with confirmation above the pre-market high. The further price reaches below this 618 retracement, the more likely it's going to attempt another low. And again, 43.16 is a possible target if we do break below yesterday's low from here. For the alternative in red, that the B wave has not completed yet, will instead fill out as a wider flat. Basically, price needs to get above the 618 retrace here at 44.19 to open that door. It doesn't invalidate the wave 2 above there, but at least does start to shift probability slightly towards that red count the further price does reach past that 618 retracement at 44.19, and then price can continue up, retest the high that was made on Sunday or slightly exceed there in the wider flat B wave, and then we reattempt the C wave back down later at the end of this week or early next week. Moving on to the gold chart, mildly positive pre-market this morning, but still not a whole lot to speak of yet as far as this bounce goes off of the low that was made yesterday. Certainly no clear evidence of any sort of lasting bottom in place yet. Price still kind of hanging out around the 618 retrace of the rally off of the low that was made back in August here as this potential A wave. But again, no clear evidence that the pullback here, if corrective, if it's going to hold a corrective pullback as a B wave has completed. 618 retracement is always ideal for any corrective pullback for price to hold in order to keep best odds of turning back up in something more immediately bullish. Otherwise, if price does continue to stretch lower from here, that 764 fib at 1715 is the next fib support to watch. And basically, to open the door to a bottom in place, price needs to make some higher local highs, higher local lows, and indicate a near-term trend change. And that starts with a breakback above the high here that was struck at 1761. So until you see that, have to certainly allow for and give price the opportunity to reach lower, since we have zero indication of a local bottom in place yet. Silver, on the other hand, it was slightly outperforming gold yesterday. Pre-market this morning, obviously some decent underperformance here. Price down 1.5% back to the prior lows in the month, looking like it does want to stretch down to the next fib there, that 1764 fib at 2171. As our wave 5 of C here still in progress. So no indication of a local bottom in place here yet either, and similar parameters to gold. Price needs to basically turn back up, break above some of the previous local highs here. Yesterday's high, Monday's high, and then the high that was made last week, in order to open the door to a bottom being attempted. It's already starting to stretch down to that next fib there, 2171. Let's see, pre-market for GDX last trade was at 29.47, a little bit above the close that was made yesterday, but similar situation here. We don't have clear evidence of a bottom in place yet. Prices just a little bit underneath that 764 fib. This is a 764 fib extension based on the size of the A wave here for this more muted C wave, as I've discussed before. Personally, I lean a little bit more towards the C wave being closer to completion rather than the more nested 1-2-1-2 to the downside. Yes, that certainly is a possibility that we have to watch out for, but until I see evidence across gold, silver, and other individual mining stocks start to shift in favor of that potential, again, I'm looking at the C wave trying to complete a little bit sooner rather than stretching down to the low 20s. That said, again, no evidence of a local bottom in place and can still stretch lower even under that more muted scenario towards the next major fib support, the 50% retracement of our rally off of last year's low into that high that was made back in August of last year, and the measured move fib here for wave C compared to the size of the A wave. So closer to 27 as possible before that bottom is actually attempted, that blue C wave. Similar situation otherwise, need to turn back up, break above some of the previous highs that we saw at the beginning of this week and last week to start to open the door to a bottom being attempted sooner. Moving on to the crude chart, price did drift a little bit lower initially during the after-hour session, but has since turned back up and is now trading higher pre-market this morning. It slightly undercutted that 50% retracement fib 74.08 that we discussed yesterday as support that should hold for this pullback as wave 4 of 3, so effectively is holding that support. So definitely ideal that price does remain above the low that was made pre-market this morning in order to maintain the odds best in favor of our impulsive path here and price turning up in the wave 5 of 3, which if we do see successful follow through can take price up to 78.38, 78.83 is the next target region for the wave 5 of 3, and then start to subdivide in the rest of the 4th and 5th waves from there. So near term expectation is for higher as long as price is above the pre-market low that was struck at 73.67. Below there does start to threaten the impulsive path, at least as currently drawn here. Series of 1s and 2s and working on the heart of the wave 3 and potentially morphs this into a diagonal structure, but we can cross that bridge if that happens. Next up on the dollar chart, price continues to stretch a little bit higher here, positive on the session, reaching closer to that next fib at 94.07. So since price has exceeded the prior August high, it invalidated anything immediately bearish as far as a 1-2 or an AB to the downside off of that prior August high, and has opened the door to the bullish potential. Zoom out here to the daily chart that the low that was made back in May was a truncated 5th wave, and we have either a 1-2 or an AB off of that low trying to start a 3rd or a C wave to the upside. So that's the kind of bullish interpretation right now. And off of the September low, this could be a leading diagonal as 5 up trying to complete. And as the wave 1 of 3 or wave 1 of C, consolidate as to wave 2 and then continue to the upside from there. The bearish alternative is that this is an extension of the blue wave C of 4 here, that water flat 4th off of the low that was made in January. And this 5 up off of the September low is the 5th of that wave C of 4. But to really open the door to the bearish potential again, price will eventually need to get back below the September low, because even within the context of the bullish red count, pullback as a wave 2 can follow next. So needs to invalidate that 5 up as the start to another move higher as either a 3rd wave or a C wave. All right, we can take a look at some requests, but unfortunately I won't be able to go over individual stocks. But let's see, first up is the Nikkei. So the Nikkei traded lower yesterday, undercutting the low that was made last week, so confirming that that bounce from the high at the beginning of the week was a B wave, and now filling out wave C of what now looks like and what should be a wave 2 pullback, following the wave 1 complete off of the August low. So pretty close to testing the upper end of standard retracement support, 382 at 29,300 roughly, with the 50% 28,800 and 618 28,360. So there's room to reach a little bit lower in that wave C of 2 between that 382 and 618 retracement is support that is expected to hold for the wave 2. Let's see, question from Alex. Am I currently seeing a more bullish path yet where wave 4 was complete? For the ES, no. This does still count best as a 3-wave structure off of the low that was made earlier in September here. So really the near-term bullish path is a wider flat for the B wave. On the Russell, though, in this case, it is still easier to be bullish. Small caps, as we've discussed a number of times, they've been correcting ever since the high that was struck back in March. So they've, from a both price standpoint and duration standpoint, more than satisfied a fourth wave at the same degree as the fourth wave we're filling out currently on ES here. And it can count as complete back in August in a possible 1-2 off of that August lows, the start to the 5th. However, given that we're not expecting a bottom in place yet for the Nasdaq or the ES, have to also consider the same potential of a B wave bounce off of the September low and price starting a C wave lower, that's shown in red. For the more bullish potential in blue, support here the 50% retracement 2218 and the 618 2200. It's where price should hold. I mean, it doesn't technically invalidate until break back below the September low, but the further below 2200, that 618 retracement, the more likely price is filling out that red C wave, which can take price back to the August and July lows. Is the GDX red count something we should seriously be considering for long-term positions or not super worried? You definitely have to recognize it as a possibility and have a contingency plan for what you will do if that count does play out with longer-term positions, whether that's putting in some stops in place, putting in some hedges, or just knowing kind of where you're going to exit individual positions. Otherwise is something you definitely have to plan for. Again, from a probability standpoint, right now, based on the information we have across the various different charts, gold, silver, and individual mining stocks, I view it as the lesser likely outcome, but that can change if further support on charts breaks and we see some evidence based on the price structure that it does intend to fill out that more bearish potential. Moving on to copper, price so far has held a higher low compared to the August low. So that for the time being, as long as we are above the more recent September low, key probabilities in favor of the blue count with a bottom in place for the fourth wave. Back below the September low, and the door opens again to the fourth. Still in progress in red and heading down to 388 to 369 is the next fib support below. So this can be a possible 1-2 start to the fifth wave so long as we are holding above the September low. Moving on to natural gas. The pullback that we got into last week's low, definitely shallow and short-lived for the fourth wave, complete, but we obviously have continued back up to a new high on the month and decently higher high. So it's possible that we did complete the fourth wave, and that was wave 1 of 5, pulling back on wave 2 of 5, in which case support between here and 534 is your 618 retracement for that 1-2 in red. Back below the 618 there at 534, and either the recent high was the B wave of a fairly expanded flat, filling out wave C of a more proportional sized fourth, or you could otherwise view that as an extension of the third and just reattempting the fourth wave pullback from there. EEM so far has held a higher low last week compared to the low that was made in August. So that keeps the door open to either the wider flat B wave here in blue that can head up and target 5350 to 5460, or even the possibility that all of the intermediate degree B wave here did complete back in August. Near-term expectations in either one of those two potentials. Back below the low that was made last week, though, opens door to this blue B wave complete, and continuing lower in the C wave, and 4528 as the next major fib support below. Next up on the Nasdaq, in this case we've already undercut the low that was made last week, so even kind of further evidence here that we did complete the B wave bounce already, and price is starting wave C, but similar to the ES, this can be still just the initial wave 1 of that C wave, bounce in wave 2. Also can fill out as an ending diagonal structure, especially if it starts to bounce from here in the wave 2. It closed the gap that we saw yesterday morning before continuing down in the wave 3 of that C of 4. And it looks like if this is still the 1-2 start to that C wave, we're probably going to be targeting between the 50 and 618 retracement here, 14,270 to 13,950 before that wave C of 4 completes. Alternative, same here as the wider flat B wave. Request for the DAX. So the DAX also turned down sharply into the close yesterday, opening the door to same B wave top in place and a wave 1 of C. And one of the reasons that I was leaning a little bit more towards the wave 1 complete on ES is this looks more than just a fourth wave bounce on the DAX. It could be a little A wave up, pulling back in wave B, and then CC wave up within our wave 2 of the start to this possible C wave here. The bullish potential in blue was that we completed a smaller degree fourth wave into last week's low, and this is a possible 1-2 start to the next fifth wave higher. Price would need to get back above 15,520 at the very least to open that door, and even back above the high at the beginning of the week could be that same wider flat B wave here. The longer term view on gold and silver. So gold continues to be a little bit more constructive, shows some relative strength compared to silver, still above the low that was made back in March, as well as above the August low. So the 1-2 start to the primary fifth, primary wave 4 complete back in March is still valid. But, we need to maintain these higher lows in order to keep that setup intact and turn up soon or find support soon for this wave B of A and turn up in the wave C of A. Back below the August low invalidates the start to the primary wave 5 and opens door to the B wave and possible C wave lower. So that's a situation where gold breaking back below the August low would definitely increase odds of that red count on GDX. For silver, price is still within the standard 382 to 50% retracement range for a fourth wave. based on the size of this wave 3, and can be viewed as a B working on wave C standard flat structure. And the subwaves here work pretty well for an ending diagonal for the C wave 1, 2, 3, 4, and filling out the 5th. So another reason why leaning towards, again, the C wave on GDX closer to completion rather than a 1, 2, 1, 2 to the downside, but this starts to accelerate below that 50% retracement at 2092, then odds begin to shift towards something potentially more bearish here as well. TLT, it's actually worth looking at 10-year. So this is the 10-year interest rate. Just note it's inverse to what you're going to see on bond charts, but stronger bounce here in comparison to the pullback on TLT, where this looks a little bit more than a fourth wave bounce off of the July low, which means that this could be arguing for a possible trip back above the March high. And if we do see that, then either this is a 1, 2, 3, 4 and 5th wave of an LD, or maybe with standard impulse, this is the same 1, 2, then a 1, 2, 3, 4, 5th of a third, but similar near-term expectation for both. It can head up to the 209 to 247 region next, at the very least. So 10-year looking a little bit more, the TNX looking a little bit more bullish, so that would translate to being potentially more bearish here for TLT. Again, TLT decline still within the limits of being a fourth, but kind of right at the edge of that. So we can put that same, again, inverse on this chart. Possible fourth, and a trip down back below the March low fills out a 5th wave. Avi should be back tomorrow, pretty sure. And the VXX. I hope. VXX, similar ABC, 4th wave filling out, as long as price is holding above the low that was made at the beginning of the week here, where that completed wave B of 4, and same possible 1, 2 start to the C wave, filling out as the ES chart back below this week's low. Door opens to and potentially triggers that more immediately bearish count in red. 1, 2, 1, 2 starts to the 5th wave already. Matt, yes, a lot of the individual oil stocks can fit the microstructure that Crude is showing, that I showed on the Crude chart off the August low, working on their respective thirds. All right, guys, we're starting to approach the open here, so I think this is a good spot to conclude the webinar. For those of you who are interested in these live videos and do want to make requests for individual stocks, etc., I do oblige with those requests during the noon and the end of the day videos, so consider checking that out. All right, good luck trading for the day, and for those of you who are subscribed, I will see you for the noon video. Take care.